Hello and welcome to Small Gold. In case you missed it, top gold and silver stories from the week ended July 2nd, 2016. Some quick housekeeping. Notice the Small Gold subscribers. We've been publishing 2 and 3 stories a day for the last couple of weeks, so you are not getting all of the stories as they come out as they're published, so you can pick them up here or you can check back to the site. We're trying to limit the emails to no more than one a day and sometimes not even one a day. So you might have missed a story that we broke last week about a Swedish precious metals dealers who had their bank account closed and they believe they're under attack. We'll get to that story. They believe they're under attack by the commercial banks because they're dealing in hard currency and they're dealing in gold and silver. We'll talk about that story, but that's an example of the type of story you might miss if you're not checking the site every day. I don't want to send out an email 3 and 4 times a day, so please check back at the site, or if you can afford to wait, check back here at the end of the week. You'll get all caught up. Okay, so let's talk about what happened last week. Last week was a huge week in the gold and silver markets. Post-Brexit, there was an increase in gold, but an even bigger increase in silver. Gold closed last week at 13.15, nudged up another 2% to 13.41. But the big story was silver. Silver closed last week at $17.72 and rose more than $2 to $19.75, almost near $20. It almost touched it on Friday. That's up 11.5% in just 1 week. And look what that's done to the gold silver ratio. Earlier this year, we had been in the 80s in the gold silver ratio, and now we're all the way down to about 70.8 to 1. And if silver continues to outperform gold, we can see that gold silver ratio hit in the 60s sometime next week. Chart of the week has to be the silver chart. This is Friday's chart, where we saw a massive increase in silver, up about $1 at one point. It was at about 1987, 1988, settled down to 1975, still a massive gain of over 5.25%. At the beginning of the week, if you recall, on Thursday, the 23rd, was when the Brexit vote came in late that evening, and then Friday was an absolute disaster of a day in the equity markets, and gold and silver went up. As the week started on Monday, same thing happened. It looked like the markets were going to continue to head down, and that's where I started to think now they can easily blame this collapse on Brexit. And the Dow opened 300 points down. There was a lot of damage control out there. And as you see, during the week, they managed to bring the Dow and all the equity indexes back up above where they had been. And that took a tremendous amount of intervention. They didn't mention that they intervened in the equity markets, but they did admit intervening in the currency markets, and we'll get to that later in the podcast. Greenspan was out talking, and he said that this U.S. economic environment ends in inflation. He's been warning buy gold. He's been warning this economy is a disaster, almost as if he's a spectator and he had nothing to do with setting up the first part of this tremendous bubble by lowering interest rates after 9/11 and creating a housing bubble. But at least he's talking sense now, and you can listen to him, and he goes back to the old Greenspan, who used to be a gold bug and used to believe in sound money. And I don't know why he's decided to speak out, but at least he is speaking out, and people are paying attention. Of course, the central bankers today, they are all on the Keynesian print money, do stimulus, boost the economy. There's nothing that they won't do if they see the economy going down. They think it's their job, that they must intervene. That's the interventionist mentality. Stories out, gold extending its biggest rally in 7 years. We see a lot of stories like that last week about the media taking notice. I mean, how can you not, with gold and silver rising? The stories are no longer about gold being doomed and gold being a pet rock, and my charts tell me that gold is going to 400 and so on. You're starting to see the reverse. You're starting to see some frothiness in the opinions that you see on TV, but it's a welcome sign after 4 or 5 years of doom and gloom in the precious metal space. We had a story where a metal detector found some old gold, and then he tried to hawk it over to a museum and basically almost got himself arrested, because that's just a warning to people who do metal detecting or find precious metals or things from antiquity. Most jurisdictions, or even just find gold in a stream, most jurisdictions have rules on how much you can take and whether it belongs to you or not. So check that out before you go out looking for precious metals and old gold and silver coins. Economic data during the week wasn't very good. Just some, you can read these at your leisure. U.S. Dallas Fed Manufacturing Index was down. U.S. Mint sales, as you know, we update the sales as they come out from the U.S. Mint, and they have been lower for silver this month. They're not going to do, and they didn't do 4 million. They didn't sell 4 million American Silver Eagles this month. They sold about 2.8 million. And if you go through this blog post, you can see the daily progress and what they sold. The America the Beautiful Harper's Ferry coin looks like they're going to cap that at 34,200. Those are the 5-ounce large quarter size silver bullion products. Nice product, low mintage. The first coin this year, I think it was the Shawnee National Forest. That one they sold over 100,000 of. It looked like they were going to up the mintages on those coins, but it looks like maybe they're not. We covered a story on gold found in cow urine. I couldn't figure out why the gold was in the cow urine, but it was a story that I found out of India, where these scientists found that there is indeed traces of gold in this particular type of cow that lives in the western area of India. And this type of, there's an old ancient Indian medicine that involves, if you can believe it, drinking cow's urine for its medicinal benefits. So they've added another kind of benefit, that there's gold in this cow urine. Market manipulation, as I mentioned earlier, Denmark admitted to dumping nearly $1 billion in krona to prevent it from rising. So a lot of the safe haven currencies did not want to see, after Brexit, people rushing into their currencies and having their currencies go up 3, 4, 5%. So they sold currencies into the buying and kind of capped the increase. Similar to probably what happened to gold and silver last Friday, where they went up post-Brexit and then just flatlined for the rest of the day. And that has the earmarks of central bank intervention, making sure that neither currencies, nor gold or silver, go too high. And also, as we see later in the week, they made sure that the equity markets came back up, because even though they said that Brexit would be a disaster, they said that as a warning. They didn't want it to happen. And then when it did happen, they had to go into damage control, which shows how much they can control, at least temporarily, the prices of the equity markets. Now, what happened with gold and silver, it looks like they capped it temporarily late last week, and then by the end of the week, this week, doesn't seem like they had any control over the silver price at all, as it rose over 10%, most of it in the last 2 days, Thursday and Friday. Gold imports through Hong Kong rose 68% in May. That's important. You say, well, so what? They always rise. They haven't. In January, February, March, and April, gold imports through Hong Kong to China have been very low, much lower, and down actually from prior years. So May was the first month where they kind of sprung up. And that brings us to a podcast that Rory Hall and I did during the week, where we talked about this shift. For the last few years, the story has always been how much gold has been going into Russian central bank, how much gold is going into the Chinese People's Bank of Republic, how much gold is being imported through Hong Kong, how much gold is being imported into India. Well, this year it's kind of slowed down in China, Hong Kong, India, and Russia. India slowed down because the government has put all types of tariffs and taxes on gold, making it difficult to import gold. China just seems to be slowing down its pace. Russia has slowed down its pace of buying, but to counteract that slowing demand, in the Shanghai Gold Exchange has also had lower withdrawals, and you can see all that in the post here. Gold demand shifts west to the west. There's a podcast with that you can check out here, and there's also a bunch of charts that show the declining gold demand in the East. But counteracting that is a increase in gold demand in the West. And there's a chart here. I just pulled one from the blog post, but you can check out all the charts at the link above. Is this chart shows Switzerland is a major refiner of gold. It doesn't mine it, but it refines it there and then ships it out. In the last several years, that gold they've been shipping out of Switzerland has been in the form of recast bars for the Chinese market, sending it to India, places east. But this year, this blue box here that you see, that indicates the gold that's been shipped from Switzerland to London. And you can see that amount is larger than the amounts that are being shipped to India, China, Hong Kong, and points east. And that's a major distance, because if you look earlier, you hardly ever see London getting any gold from Switzerland. But this year they're getting it. And the reason they're getting it is to fill the vaults of the gold ETFs. And who buys the gold ETFs? All the major type of investors like Soros and Paul Singer and Drunken Miller. They all buy gold ETFs. They don't tend to buy physical gold, but physical gold has to back the gold ETFs. So the gold is going into those ETFs, into those vaults. How many claims are on it, I don't know, but there definitely is a movement of gold, physical gold, into the vaults in London. And that's a big change just that happened this year. What's interesting is when Rory and I did the podcast, all the data that we had up to that day was all declining Eastern demand. But that day after the podcast, the information came out that Hong Kong imports of gold had risen 58%, which means now if there's demand both east and west, we could see supply issues. There could be some tightening if both parts of the world are having surges in demand. We broke a story earlier, and I don't know if I sent this one out, but we might have. JP Morgan was cleared in another silver manipulation case. This is one they were accused of in 2011, 2010 of making uneconomic bids in order to drive the price down. And the court said that they can't be held responsible, they can't be held liable for that. And just because you make bids that seem to the rest of the world not to make any sense, they weren't going to get involved in as to what their intention was when they made those bids. Now, common sense tells you JP Morgan's not stupid, and they're not going to make bids to lose money, because all their other trading they seem to win. But there's a thing in legal business, the business judgment rule, absent some type of overt or something that shows intent to do something criminal, they don't challenge the business decisions. And so JP Morgan lost some money in the silver market. The court's view is, so they lost some money in the silver market. That doesn't mean they were manipulating it. So that was a disappointing result, but this is one of many. Global bailouts. We had Puerto Rico. They're going to get a bailout. The German finance minister said Portugal needs one. They'll get one. So we do see these credit stresses happening all throughout the world. And as much as the central banks like to say that they're not bailing out anyone anymore, well, okay, central banks didn't bail out Puerto Rico. They got Congress to do it. Here's another story we broke. Swedish precious metals dealer had their bank account closed without notice. That's an interesting story. You can click on it. But Sweden, as you may know, is at the forefront of the cashless society. Their banks are heavily into negative interest rates. And this particular Swedish precious metal dealer had their bank account closed without notice, and they believed it was because they were selling precious metals. They also sell currencies. And they think it's because of their business, and that the banks, the SEB was their bank, one of the largest banks in Sweden, who closed their account. And this precious metals dealer believes it's because of the business that they're engaged in. So it's not a very good sign. It's a good sign in a way that the banks are nervous and they're trying to choke off the sales of precious metals. But it's a good sign in that they realize that there's a big demand for precious metals. The bank managed to have another bank account set up in Estonia, where they managed to run the payments through there. But they did make a point of saying that this was done, they believe, without notice and because they were a precious metals dealer. If I get any more information on that, I will pass that along. In the aftermath of Brexit, they cut the British debt. It seemed like a retaliation. And then the EU rating was also cut. The yuan was headed down. So you've got a lot of these currencies fluctuating, and the dollar really didn't catch much of a bid. You would have thought that Brexit would have created this rush into the safe haven of the dollar. Certainly didn't. Or if it did, the Treasury capped it by selling dollars, though there's no indication of that. But the US dollar index is still below 96, and the big beneficiaries of Brexit were the gold and silver markets and, oddly enough, the equity markets. Story about cheap gold mines disappearing. That's a good story because if you follow what happened the last 3 or 4 years, there have been some companies like Keith Neumeyer's First Finance, I think it's called, companies that are going around and finding or buying gold mines for pennies on the dollar, or just for a few dollars on reserves that the mines might have had but haven't developed, because the sentiment in the gold and silver markets were so low. But in the last 3-6 months, there's been a dramatic increase in merger activity and then purchasing mines, and China's involved in that. And it's interesting that this story points out that the cheap gold mines, this is Bloomberg, so it's national mainstream media attention, are disappearing. So the days of finding these cheap mines seem to be long gone. The IMF came out and said that Deutsche Bank is a problem, and Deutsche Bank is it has all types of exposure. It's well known as a weak link in the European banking system, and their shares are now at a 30-year low. Of course, Bank of England, Carney is the head of the Central Bank of England, the Bank of England, and he says that more stimulus may be needed this summer. And it's just another excuse to do more stimulus. The reason? Brexit. He sees a material slowing in economic growth because of the Brexit vote. There was a good story out on the dollar, and those who follow de-dollarization. It showed that basically dollar as a percentage of reserves, international reserves that central banks hold, has gone down from 64.3% in the last quarter of 2015 to 63.6%. That number used to, and the dollar fell 4% during 2016 so far. That number used to be 70-75%. So there is a steady chipping away of the US dollar being a reserve asset. And that ties into my theory as to why the Fed is always looking to at least talk about raising rates, is to kind of put that dollar in a stronger position, make the dollar stronger, make US Treasury bonds more attractive because they pay a slight interest rate in a world of $11 trillion worth of negative interest rates. The Fed Governor Powell mentioned that the Fed is not contemplating negative interest rates, but the fact that they've been mentioning for the past 2 years, even while they're talking about raising rates, means that they're considering them, they're considering the legality of them. In fact, I think Janet Yellen said a month ago that they've now got the clearance that it is legal, but they're not going to do it. I expect them eventually to do it, but only after all other central banks are negative and deep into negative territory. And then the Fed can be the one that has the highest negative rates, meaning the closest to zero than anybody else. But I don't see the Fed going that direction first. I think they'd rather do another round of QE before they engage in negative interest rates. And finally, the interesting thing about Brexit is, while everything else seemed to recover in the equity markets, the British pound really didn't. It kind of recovered a little bit, but it had gone down to about $1.30, $1.32, and it's kind of in the $1.30, low 30s range, and it had been at about $1.50 just before the Brexit vote. So it's a big hit the pound took, which means that the gold and silver increases relative to the British pound are dramatic. So gold is up about 40% this year against the British pound. And we do this every quarter, we do gold priced in world currencies, and we cover more than a dozen of the major currencies and show what gold did during the quarter. You can click on the link there and you can see all the charts. But this one I just wanted to highlight is what happened in England. If you look in January, it's about 700 pounds for an ounce of gold, and now it's up close to 1,000. So that was a 40% increase. Even more dramatic, we put out another article called Silver Up 56% Against the British Pound in 2016. That shows where silver was about $9, nine and a half pounds per ounce, and then is now up close to about 14 pounds 50 pence per ounce. So both gold and silver, while they're up dramatically for those of us here in the United States, they really served as protection against the pound and any pound denominated assets if people were smart enough to buy that insurance earlier in the year, when you would think they would have, because they are the ones who would have known that the pound was going to get hit, and they're the ones in the UK that have pounds. So the time to buy insurance is when a known risk is on the horizon. Now, whether you thought it was going to happen or not going to happen, there was always the chance that the Brexit vote might go the way of leave. And it was pretty common knowledge, or projected, that if the leave vote prevailed, the pound would get hit. Well, if you knew that, the easiest way you could insure yourself against that was to buy gold or silver. But at the time, at the beginning of the year, gold and silver were considered passé. No one wanted. The sentiment was very low on gold and silver. And as you can see, that changed pretty quickly there, and pretty quickly there up with gold. Well, I hope you've enjoyed this, and if you did, please subscribe to smallgold.com. You can go right up to the top, enter your email address. We'll update you, as I mentioned, no more than once a day. Also subscribe to the YouTube channel, and we'll talk to you next week. Thanks very much.